Hey everyone! Welcome back to the next vault. Today we're tackling a question a lot of beginners ask. Can you really build wealth by investing just $50 per month? The answer is yes, but only if you understand how money compounds, where to invest, and how to stay consistent. So, in this video, I'll walk you through how compound interest works with small amounts. The best beginner-friendly options in 2025. A. Step-by-step $50 month plan for Europeans. Risks to avoid so you don't waste your money. If you're ready, let's get into it. The power of small investments. Let's start with the basics. Investing isn't about hitting a jackpot overnight. It's about consistency. If you invest $50 per month with an average market return of 8% after 10 years, around $9,000 after 20 years, over $27,000 after 30 years, close to $68,000, that's not because you saved a lot, but because of compound growth. Your money earns returns. Those returns are reinvested, and the snowball gets bigger. It's like planting a tree. It starts small, but with enough time and care, it grows into something powerful. Where to put $50 a month in 2025? So where should you invest in September 2025? Let's break it down. ETFs, exchange traded funds. For beginners, ETFs are the best starting point. Low fees, diversified, and they track the global market. Examples: MSCI World ETFs, S&P 500 ETFs. With $50, you can use fractional shares or automatic savings plans through brokers in Europe. Dividend stocks, companies that pay regular dividends, give you cash flow. Not as diversified as ETFs, but a great way to reinvest payouts and compound faster. Crypto allocation, optional, riskier. But if you put even 5 to 10 cents out of your $50 into major coins like Ethereum or Solana, it can boost returns. Only do this if you're comfortable with volatility. Robo-advisors or apps like Trade Republic, Scalable Capital, or Bitpanda offer $50 a month savings plans into ETFs automatically. This makes investing stress-free. Step-by-step $50 plan. Here's a simple model you can start today. 30. Global ETF like MSCI World or S&P 500, 10. Dividend stock or ETF for passive income. 5. Crypto, Ethereum, Solana, or even stablecoins if you want low risk. 5. Emergency savings, cash buffer for unexpected expenses. This spreads risk, gives you growth, and keeps you disciplined. The key? Automate it. Set up an automatic savings plan that withdraws $50 every month. You won't even notice it's gone, but future you will thank you. The risks. Now, let's be clear. Investing isn't risk-free. Market crashes. Stocks can fall 20-30% in a year. That's normal. Don't panic sell. Inflation. If you only save cash, inflation eats your money. That's why investing is better long term. Overconfidence. Putting 50s into just one meme stock or one risky coin can wipe out your capital. Diversification is your best friend. Think of investing like training for a marathon, not buying a lottery ticket. So, can $50 a month make you rich overnight? No. But can it set you on the path to financial freedom? Absolutely. Remember, start small, but start now. Stay consistent. Let compound interest work for you. Diversify and think long term. If you found this breakdown helpful, make sure to hit the like button, subscribe for more investing guides, and comment below. What's your investing strategy right now? Thanks for watching, and I'll see you in the next video.